Thank you for watching Deep Dive with me, Nikunj Dalmia. Well, we've seen gut-wrenching volatility in the last couple of days, and in the gut-wrenching volatility, everyone is saying that what is next? Is this as bad as 2020? Is this as ugly as 2008? Price action is certainly reminiscent of what we've seen earlier. Now, what does it mean for India? Of course, we've fallen less, but we are also falling. If there is going to be a tariff compromise, will markets really bottom out? So, do we have a Trump bottom in place? That's the big question we are asking. Second big question we are asking is that how is this correction different from 2008 and more importantly 2020? Because price action has been quite similar. And third, where are the pockets where you can really benefit from this volatility, which is where is opportunity in this market? Let's take those points with Vikas Khemani, who joins us live now, founder and CEO with Kalyan Asset Management. Vikas, nice to have you back. Thank you for joining us. So, do we have a Trump bottom in place, or it's going to be a long, long distance away?
Well, I think Nikunj, the developments are happening every single day. So saying anything that will be difficult, tough. But yes, we are in sort of volatile times, and this could last for some more time. As you know, that every day we kind of hear one good news or bad news. So the only good news according to me out of this is that India is on a relative basis quite well placed, and that can give us comfort and eventually, I think it will settle down in next couple of months. And once I think the dust settles, I am sure India will definitely emerge a winner or a better player or better placed uh, than what it is today. So that's at least confidence I have. Now, as far the from bottom or how much it can correct more, nobody knows. But I would like to believe that market should bottom out in around 22,000 levels of Nifty, which is where we are. I think give and take 300, 500 points. These days swings very often, so can't say that. But I think from a fundamental perspective, valuation perspective, it's a good range of 17, 18 times earning. India macro from all standpoint of view is very, very solid. There's no fault line. There's no major risk. I think that the policy pivot which has been done by RBI and government in terms of boosting growth. I mean, today you saw RBI policy action was very good. The decisive move from 3.5 lakh crore liquidity deficit to 1,40,000 crore liquidity surplus, is clearly an indication towards saying that there is a policy towards boosting growth. So I think that we will see corporate earnings decisively moving in quarters to come. So I think net things are turning positive. I think this clouds which we are seeing right now in terms of global tariff war, I think is positive for India if you just look at, and if someday it will settle down, whether it will take a month or two, I don't know, but I'm sure it will settle sooner than most people expect. And after that, I think markets will resume its journey back.
Prices will bottom out before events do. What is the right way of understanding that this is the price bottom? It may not be the news bottom.
So I think again, from a short-term perspective, nobody can say that market in short-term market can be very, very irrational. For one news, we saw how markets reacted, on a particular day, and I think India stood again very, firm within that construct. But markets can go. But another comfort one can take is that we are in a good growth environment as far as Indian equities are concerned, economy is concerned. And at 17, 18 times price to earning, Indian Nifty does not look at all expensive. It is very, very good proposition. And like we have discussed many times, nothing on the Indian story changes. Let's understand, even if Trump goes ahead with the tariff proposed, India's tariffs are lowest. Now, if India tariffs are lowest, it's not that US can start manufacturing everything overnight or US can stop consuming everything overnight. So somewhere they will have to import whatever. And given this current tariff situation continues, India tariffs lowest being only stands out as an edge for India rather than a risk for India. So Indian producers will be far better placed in terms of exporting to US than anybody else. And if that's the case, then the worry should not be there. It should be seen more as a comfort. But whenever there's a fearful environment global level, it is rightfully that markets can be edgy. And that's the reason I believe that I don't see deep downside from here unless some again catastrophic event happens, globally. I mean, no, it's very hard. My sense is that we are in and around 500 point plus minus from here. We should be in this range, and as the earnings come out, as the issue settles down, we should resume our trajectory. My sense is that in this quarter, April, May, June quarter, all these things should settle down, and June onwards we should look good.
Okay. But because the commentary which will come from managements for this quarter, more forward looking, will be compromised. No one knows what will happen to exports, how imports would move. So won't that make markets nervous? Because if corporates don't know where their business is headed in the near term, that means that we could be in for a washout Q1 and perhaps a troubled Q2.
Nikunj, I think see commentary and that does not mean that necessarily has to result into numbers, right? I mean, commentary comes from the point of there's a lot more uncertainty and rightfully. I mean, if I wasn't anybody, if you were to ask about my business and how it looks like next quarter, how will I tell you that I don't know the direction? So no management, no company would know even in this kind of environment that what will happen in a shorter term. But long term, I'm sure people will be able to comment. So, but at the same time, does not mean that because of the current ongoing situation, everybody in the numbers will go for collapse, for toss. I think some companies where the exposure to US is high, you might see order getting postponed, and to some extent Q1 numbers could be soft, but that too only company which are exporting to US. But does it mean that banking sector is in trouble? Does it mean consumer segment is in trouble? Does it mean your capital goods which is focused on local thing is trouble? Does it mean pharma is in trouble? Does it mean so? I think there's a very small sub-segment of economy which gets impacted because of exports to US, and that too also we are not saying it will stop because India tariffs are lowest, so why will it stop? So my limited point is that uncertain environment remain there, but I don't think Q1 being a washout kind of quarter for Indian corporate by and large. Given, I mean, you can have one or two segment or sub segment, but broadly, I don't think there's any sort of major washout expected.
Because one side interest rates are likely to go down. India, they've already gone down. Globally also they will go down. Second side, there is fear of inflation because rates will go higher. What is the right way to look at it? Inflation coming back or interest rates going down and the impact of it?
So I think it's a very interesting question, Nikunj, you ask. I think in US, at least what I understand, that's how it's being planned. That there's a lot of cut in the expenditure which is happening through Doge, and tariff will probably give some tax collections. So net, I think President Trump probably trying to bring down the fiscal deficit, which will pave the way for aggressive interest rate cut, and which will eventually pave the way for investment cycle. This is the probably path President Trump is seeking. The problem with this path is that there is a lot more pain before it starts getting the gain, right? So this journey for US, in my opinion, will be painful. US could be facing an inflationary issue if they go ahead with this kind of tariffs, because it's very simple calculation. It's not a big deal you need, but so I'm sure that that they will have to figure out whether how much inflation happens. Nobody knows. Again, like I said, if you don't know what the outcome, what the policy is going to be, how will we know the inflation output? But at the same time, as far as India is concerned, I think we are in a reasonably good environment. In fact, if the commodity prices remain soft, it helps India. I think India is not in a very mega inflationary environment. We are in a reasonably well managed inflation environment over the last many years, including during the Ukraine war time. So I think India is India has a lot of scope for further monetary policy action. Should the global environment turn difficult, India has sort of India has scope for monetary action. India has scope for fiscal action. So that's a good news. And that's when I keep saying again and again, should the global environment turn a little bit more difficult, I think India remains on a relative basis quite insulated.
They say volatility is always investors' best friend. There's volatility in the market. How are you making volatility as your best friend right now?
I think, we are also evaluating companies, if there are any switch opportunities in terms of getting better companies, because a lot of companies have corrected in this fall. So we are evaluating like any other sort of market. Of course, this time we need to be a lot more agile, but, we are evaluating what are the potential segments, sub-segments we can kind of invest into. Like, I think there's a lot of fear around pharma, right? Because of the potential tariffs. I don't think, US can afford to aggressive tariffs on pharma. Even if they do, it will be passed on because Indian companies don't make that much profit to absorb the tariffs. And there's no choice for US consumer where Indian companies have 40-45% market share in the formulations. Now it will pass through. If that's the case, then Indian pharma companies are fine. So if you are getting opportunities around because of this situation, you better make use of them. So there are many segments, but nothing changes in the banking and financial services segment because of this ongoing global crisis. Now they are great opportunities. So I would say that you kind of realign your portfolio. To some extent, we are positioned well on these kind of situations. But you realign your portfolio, and I'm sure on the other side of this whole volatile period of a quarter or so, I think we will come out quite okay.
Say that the best gains are made when there is a crisis, and you should never waste a crisis. So is this one of those crises one should not waste?
I think so. Like I said, whenever there's a maximum fear, whenever there's a maximum uncertainty, those periods are the periods of commitment because that's the time fear is highest. I again remind you, Nikunj, very similar period was there in 22 when the markets Nifty had come down from 18,500 to 15,500, and Ukraine war prolonged. And I think that time everybody started extrapolating. In fact, some people ended up saying we might go to World War III and oil might go to $200, and all kind of extrapolation happened. And market started rising on the back of complete skepticism. June 22 was when it bottomed out, and we saw massive, performance on later part of 22 and 23. So I see pretty much similar where Nifty has corrected almost 20% from 26,500, and right now geopolitical concerns are there, and the tariff concerns are there. But we must not forget that Indian macros are well in place, Indian economy is well in place, Indian story is well in place. There are no major risks around that. So yeah, today it's just we should think like a viral attack happening, and after 2 days of favor, we will get back to work.
Which are the stocks or themes you want to buy in this decline? Banking, everybody's talking about, but what else? I mean, when supply chains are disrupting so rapidly, a lot of changes will happen.
So, like, I think again, right now the way we are positioned, we are quite overweight on banking and financial services. We are overweight in pharma, CDMO space. We have some consumer names in our portfolio. So again, we have industrials or capital goods play in our portfolio because we think the investment cycle continues to remain robust. So around that, most of our portfolio is right now positioned, and then it boils down to individual stock specific names, and we don't think there's any major challenge happening in specialty chemical did very well. We are seeing softening, but I think there also there's good opportunity coming around. So I do not, I mean, some of these names, which are segments, we told you we are quite overweight, and we keep looking at individual names and stories, and it boils down to again then the stock picking.
Is all the bad news in IT in the price? Because like a TCS is down 35%. But these are companies, Vikas, which still generate a lot of cash. They still have solid return ratios. So do you think there is extra pessimism in IT and this earnings season, which would be marred with confusion and perhaps no substance because IT companies also don't know what to share? Could this mark as a long-term bottom for them?
So I think IT probably is facing two challenges. One is especially large cap IT companies. One is obviously potential slowdown in the US growth, as is talked about. One does not know the potential, at least the perception of slowdown, and we will only know in time to come whether it is slowdown or not. And second one is the potential challenge in terms of what will happen on AI. And there are lots of theories. Some people believe that AI will be an opportunity for them. Some believe that AI will be a threat to them. So again, depending on which side. So broadly, markets kind of tend to don't rate stocks which have few uncertainty around very well. But having said that, like rightly you said that even the cash flows and all those things, 20 times in and around earning is a good valuation with a good dividend yield. These companies do sort of offer. So I think real opportunity, according to me, is in the mid and small IT cap space where you can find a little bit of product oriented company, a little bit of company focus in AR&D space for companies focus in which are a little bit more AI oriented. Those kind of companies probably will find better sort of growth profile and better journey ahead. So I think rather than looking at IT overall space, I think I would say that it boils down to there will be some companies surely big winners, but there will be many companies which will be just kind of growing in a slow mode or stagnating because of their basis.
Vikas, really appreciate your time. Thank you for joining us now.
If you like this video, then like, share and subscribe to ET Now.